patterns today in our class. We're covering, specifically we're covering the ABCD pattern. Okay, so the ABCD pattern, which I'll get to shortly, they happen all over the place, and they can be used for entry as well as take profits. Before we get going, I just want to run through the disclaimer quickly. Spread betting, forex, and CFD trading carry a high level of risk to your capital and can result in losses that may exceed the initial deposit. Trading of these products may not be suitable for everyone, so please ensure you understand all the risks associated with trading. Information and comments provided here and in no circumstances are to be considered an offer or solicitation to invest, and all information provided is believed to be accurate the date the information is produced. Nothing herein should be construed as investment advice, and information provided within the room is the personal opinion of the moderator and not Tradimo. This content does not constitute financial investment or tax advice, and Tradimo does not accept any liability for the content of the comments made during the session. Alright, so what I've got now is a chart up of the euro dollar here, and what we're going to cover quickly is the ABCD pattern. Right now, it's a very simple pattern. It's all it is really is we have a single leg in the marketplace. All right, so we get a thrust up. Price then retraces. Okay, so it retraces part of that move from this leg up. Let me label this quickly because this is how we're going to have. It's got A. Price then rallies up to B. Okay. It then pulls back and retraces. Okay. And once it's finished retracing, we can then label that as point C. And very simply what we're looking for is we're looking for the market to turn around and move up again, but we're looking for it to equal this leg here, this AB leg, okay? So we're looking for this AB leg to equal itself, so the CD area. And what we would look at doing is very straightforward, looking to trade point D, okay? Either trade point D as in enter a new position, or we can use point D as an actual take profit point, okay? So let's say, for example, if we're looking to trade short a point D, we'd obviously look to enter a new position at this area. Or if let's say we've entered somewhere at C on the retracement, then we can look at point D to get out of our position. Okay. Hopefully that makes sense to you guys. Okay. So all it is, it's two equal legs in the marketplace. So this leg here, AB, is equal to CD. Okay. That's essentially what we look for. Now, obviously, there's a little bit more to it than just that. If we're looking to actually enter it, if we're looking to take profits, then we can simply use it like this. Okay. So we're looking to take profits. We can look at taking profits at this point. Now, how do we work out? Well, I'll show you some tools we can use shortly. How we can work out the whole thing. So that's what we call a bearish ABCD pattern. Sorry, let me just put this back in here quickly. That's a bearish ABCD pattern. Okay, because we'd be looking to sell short. The bullish ABCD pattern is just basically the opposite. So we have a drive down where we have A to B. Okay. Price then retraces. And once it retraces to a point and starts to turn around, we can label that point C. And very simply what we're looking to do as traders is either anticipate where point D is going to form, looking to trade long, or if we're in the market already short, we can take profits over here. Okay. Now, if you had to go and look at this in a book or manual or something like that on the internet, you would see it looking like this, and this could possibly confuse you somewhat. These triangles, okay, some sort of symmetrical looking type patterns. Okay, But don't get confused with the triangles. Very simply, the pattern itself looks like that, okay? And what you'll notice with this, right, is the pattern looks like a lightning bolt, okay? It gives a zigzag formation, okay? So now we understand what the pattern looks like. Let's have a look at how we can use the pattern. Now, there's some simple rules, or well, there are obviously some rules around. But what I'm going to look at first of all is using it as a take profit point. Now, if you have a look at your fib tools, if you're using MetaTrader or other software, you want to find something that says fib expansion, okay? Not the Fibonacci retracement, the fib expansion tool. Now, if it's not up there, which I doubt it will be, you'll need to go into this little box here. So you've got a little dash thing here. Just hover your mouse over there and right click. And when you right click, it'll come up with all these things here. And you say, it says customize. If you click customize, then you'll be able to insert or remove certain tools. And you'll see these are available. And all I've done is inserted the expansion tool. Okay. So very simply, what we're going to do is, once we've got A, B, and we think we found point C, okay, so we've got 3 points, we then take the expansion tool and we mark it from A up to B, and you just make sure you see there's 3 points, and you just make sure we drag this down to point C, and you'll see the way I've marked this up. It says FE100, okay, and I've got FE127 and FE1618. Okay, those are just different expansion points, but the main one for today, because we focus on the ABC pattern, you just need to know where the 100% mark is, okay? Very straightforward. If you don't want to use that tool, as I said before, you can just literally measure the distance or trace it out on your chart, and then just simply hold Control C, copy that, and move it across, okay? And that'll give you exactly the same thing. So just look at this. So once again, fib expansion tool, draw from A up to B, okay, double click on that, and we just move it down to point C, and you see it gives this pink line here, okay. So we copy this red line, once again, you'll see it's exactly the same, okay. So either or, whatever's easiest for you, all right. Now, in terms of the settings, one thing, what you will notice is, if we go to expansion properties, your default settings are going to be slightly different, okay? You'll have like 0.618 there, and you'll have a few other ones. The main one for the pattern, the ABC pattern, all you really need there is the 100% mark, okay? That's it, okay? All right. So pretty straightforward, I think. Now, if we take the same concept, okay, and we move it over to the bullish ABCD pattern, okay, move it over to the bullish side. Very simply, remember, we've got 3 points, A, B, and C. Once price starts to actually turn from this point here, okay, maybe you've entered at this point in retracement, whatever the case is, okay, we can then move from here, expansion from A to B, and just adjust this up to point C where it's turning, okay, and that's going to give you your expansion area. And as I said before, if you don't want to do that, you can adjust this. Okay. You can simply take this, come on, take this tool here, and just copy it over, add it to the high at C, and you'll see that FE100. And it's at that point that either you're looking to take profits, okay, or you're looking to go long, okay. So you'd actually be looking to trade to the upside from here. You're essentially doing the same thing, okay? You're buying back at that area. So either you're entering new position or you're buying back your position. So if you're short, you buy it back. Okay, it squares your position off, right? So what I would suggest is, if you're going to use this, and it works extremely well, by the way, if you're going to use it as a take profit point, just use it like this. If we're going to use it as entry, we need a few more points. Okay, so let's look at it on the chart as take profits. Okay, and we can simply just kind of look at some points on the chart here. You can use it on any time frame, really. Okay, but essentially what we'll be looking at is just identify some clear swing in the market. Like here, for example, we get a clear swing down, then price retraces. Okay, so just copy this over like that, and you can see how price stores exactly to the pip. Okay, absolutely to the pip before moving. Okay, now it does take a bit of work in terms of where to draw these things. Okay, like why did I draw it here and not from this high here? Right, now that's just it comes down to kind of just a bit of experience, really. I can't say there's always a reason. It's just this swing is much clearer. This is a horrible swing here with a nasty looking spike. It's just it really is just a thing of experience, nothing more. Okay, here we go again from this low up like this. Price rallies. Price has a retracement here. Okay, so we copy this leg and extend it. Okay, this would be the ABCD pattern. You'll see it was only hit a lot later. Okay, so if you take profit up here, it possibly would have had gone through a bit of drawdown or maybe bailed in the trade. It's come very close. I don't think I would have let the market come all the way back against me after missing it by like 2 pips or something. Okay, if we look at the larger swing here, so we have this swing up from this low to this high, that would be A, B. Price then retraces down to point C, and then very simply extend this, okay, up here, and there's your take profit point. You can see our price sells off by about 10 pips, right? And the same thing here, we've got a smaller one from here to here. Price pulls back from there to there, and if we extend this up to here, you'll see price goes through the level by about 4 pips before pulling back. Okay, so it's very straightforward in terms of take profits. As I said, if you want to, either you can use these lines or you can just keep it very simple. Fib expansion tool, which is up here. Okay, so for example, we could look at maybe from here to here onto here on these swings, and you can see prices come very close and is missed by less than 2 pips. Okay, before collapsing. Okay, so it's not it's not as with anything else in the market. It's not something that's going to happen all the time, but it does work a good majority of the time. Here we've got a swing in here, so we go from this swing up to here. I think that's high. Yeah, it's the same high actually. To there, you'll see how price moves up into the 100% mark before fading. Okay, right. So just very nice, simple little patterns, and as I said, they can literally occur on all time frames, and we can use them as potential take profit areas. Okay, you can see here A, B, C, and then price moves up. Obviously, price extended here past the extension points. Okay, but it's just a nice simple way of looking to take profits. Sometimes it's obviously prices are going to overshoot, sometimes it'll undershoot, but it's a very good, simple, mechanical way of doing things. Okay, let's put it like that. And just play around. You can see like from here, A, B, C, D, we stall out 5 pips before fading. Okay. Okay, so that's obviously covering the take profit option. Okay. In terms of taking these trades, or actually moving the same pattern forward and looking at actual trading them, okay, so we're actually looking to enter as a viable pattern to entry. We'll take the same concept, okay, so remember we've got the initial swing A to B, all right. Now, this is where it gets a little bit more complicated. So from A to B, once price starts to retrace from B, okay, you want to take your Fibonacci retracement tool and draw it from the low up to the high, okay, and now is where you want to start paying close attention, okay. If price comes down, I'm not focused, don't focus on the 23.6 at all, but anywhere between the 38.2, 50%, 618, 70.7, 786, or 886 retracement, okay. So these 1, 2, 3, 4, 5, 6 retracements, okay. Any of these here retracements is where price can stall out. Now, ideally, you'd want it to stall out exactly on one of these retracements, okay. So if it hits 38.2 and starts to move off, that's great. If it hits a 50%, that's great. So ideally, I don't want it kind of in the middle there. I want it ideally on one of these specific numbers. Now, the most ideal ABCD pattern is a stall out at exactly the 618 Fibonacci retracement of A to B. Okay, so I'm going to use that as a guidance for today. You guys can go play with it. Now, in terms of these retracements, right, when you start seeing price stall out at one of these specific retracements, I can automatically think of, in terms of what I'm going to do next, which I'll show you, is basically look at the actual extensions, okay, and which extensions are likely to line up with the actual AB equals CD pattern, right? So what I'm looking for is I'm looking for an extension point to actually line up with the ABCD structure, right? So instead of, as with we previously looked at the take profit section, we looked at specifically only looking at AB equals CD. For an entry point, I'm looking more specifically at the ABCD structure, but also the Fibonacci extension. Okay, so it's a little bit more complex. So once price moves up A to B, it then pulls back to the 618 area. Okay, now it starts to retrace. Right now, once it starts to retrace, I then want to take my Fibonacci tool and draw from B down to point C. Okay, like that. Okay, so prices needs to retrace obviously 38.50. It needs to basically break above the highs. Right now, in terms of the initial retracement, so from the retracement, this AB retracement, so where C stalls out at the moment, it's stalled out at 618. Okay, automatically you want to think about what we call reciprocal ratios in terms of the extension points. Okay, so the extension point will basically, one of these extensions up here, so we've got 113, 127, 141, 1618, 20, 224, etc. Those will complement the actual ABCD pattern. Okay, so it just gives you, remember I always talk about confluence. Okay, same thing with these patterns, right? Exactly the same thing. So when price moves up and then retraces down to 618, I automatically know that the 1618 Fibonacci extension up here is where I want to be looking for an AB equals CD pattern to complete. All right, it's just the way the ratios work. So if I now take this AB leg and I copy this leg and I extend it to the C point, what you'll see, or what you'll notice, is it stalls out exactly at the 1618 extension, okay? And that adds your harmonic confluence, okay, where you have Fibonacci extensions aligning with this harmonic price movement, okay? It's very, very high probability trading opportunities that occur at these areas, right? As I said, the exact 618 retracement is very high probability. Okay, these two ratios, the 618 and the 1618, are the two main Fibonacci numbers where everything else is derived from. Okay. If you want to go learn all about the Fib numbers, etc., just hit Google. There's absolutely tons of it. It'll put most people to sleep. Okay, but if you're interested in that stuff, you can kind of see how all the numbers, the mathematical numbers, are derived. Okay. So just coming back, I'll just show you the reciprocal ratios here. When, for example, if we have price move down to a 38%, okay, so this case hits 38%, and it then starts to retrace, and I can label that point C. Then what I can do is same thing. I take my fib tool and I draw from B to C. Okay, I know the reciprocal ratios are going to be for the ABCD completing at a 38%. The ratios are going to complete between a 224 and a 2618 area. Okay. So once again, if I now copy this ABCD area and I extend it, you'll see the D point is at the 2618 area. Okay. So it's added weight. We've got the harmonic flow of the market, the AB equals CD, as well as this Fibonacci extension, right? So if we now move and down to the 50%, for example, if price moves down to the 50, and we have a bottom in place and price starts to retrace, once again I'll take my Fibonacci tool and draw it from B down to C, and this time I'm looking very simply, I'm looking at the 2.0 extension point. Okay, so if I copy it AB and attach it to point C, you'll see you have the AB equals CD exactly at that 2.0. Okay, so that's an area where you'd be looking to sell. So if you just kind of carried on with these numbers, if price retraced, we've covered the 618, if price retraced to 70.7, then I'm looking at a 141. Price retraced to 786, then I'm looking at a 127, and if we had a very deep pullback, the 886, then I'm looking at a 113. Okay, so hopefully that makes sense to you guys. Maybe it's a little bit over the top, but it's pretty straightforward. Okay, it's just those reciprocal ratios that align with the retracement points. Okay, and it just adds the confluence. Okay, now just the opposite occurs on the bullish ABCD pattern. Okay, so in this case we have, just looking at this, we have the way I've drawn it from A to B, price retraces down to the 70.7. so the 70.7, the reciprocal ratio is 141. Okay, so I draw a fib retracement from B to C. You'll see the extension point lines up right here, the 141 area. Okay, and this area here, these extensions with that AB equals CD pattern, that little base, that little block there, that will be referred to what they call a PRZ, or price reversal zone. Okay, price reversal zone. So, and this is all what I'm showing you here. These patterns obviously been around forever and a day. A guy by the name of Scott Carney, he's got some very good books out, and obviously other material and stuff. He's gone and done an enormous amount of work on these sort of things in terms of the ratios complement each other. And if you want some real in-depth reading and stuff. You can kind of, Google those books. They are, if you're new to them, it kind of depths. Okay, but if it's something you're interested in, that's pretty decent stuff. Okay, so let's have a look now at sort of application. Okay, so we've looked at theory. What we want to look at is ABCD patterns in actual what do you call it, application. Sorry, think about that. So let's look at this leg down here. We looked the first one we looked at. So we get a drive down like this, right? And we would label A to B. So when we start seeing a retracement, we want to draw a fib retracement from this downswing. And so this is point A. Okay. Then we get a drive down to point B. Okay. And then price rallies up, it stalls out. You see the 618? It pretty much stalls it bang on the pip there. And then it starts to pull back. Now once we start getting the pullback, we can draw a fib tool. So I'll mark this up here. This is point C. So A, B, and B to C up here, like such. Okay. So we take a fib tool, we draw from B up to C, like that. You'll see this 1618 area. And remember, we're doing this before obviously all this has happened, okay? Before the right side of the chart has occurred. So we're kind of doing it when it's like here somewhere, okay? Or even once it's pulled back. So that's kind of what you would see, right? And then you would simply just take this across. Sorry, I can't do it very well like this, but extend it like that. And what you would have then is you would have what we call the price reversal zone, where you have the ABCD and the 1618 area coming into alignment. Okay, and it's at that area where you would look to execute a long trade. Okay, or look to buy, right? So pretty straightforward, I think. Well, maybe not, but so let's look at this one here. So in this case, up here we have a rally. Okay. This is actually ever so slightly higher. A couple of fraction of a pip. So we get a rally. Then price pulls back. So what we want to do, we want to take our fib tool and draw from the low up to the high. Okay. Like that. And you see a price comes down and it hits a 786 retracement. So automatically I want to start thinking about the reciprocal retracement, the extension. Okay, so we've got this kind of pattern here. This is not a very pretty pattern, but I would be looking at an extension point of a 127. So from this high down to the low there. We have a 127 extension point, which is here. Okay. And then very simply, you're looking for the ABCD once price turns to equal. Okay. So in this case, you're looking at that little zone there. Okay. So you got the extension point and the ABCD area as a confluence zone. That's what we would reference the PRZ or price reversal zone. And it's in that little box there that you're looking to sell. Okay. Any questions on that stuff, guys? Okay, let's look at some other examples. So we've got a nice leg up here. Price pulls back. Okay, you see in this case, price kind of stalls out. It goes through the fifth, but it doesn't hit 618. Do you see that? So it moves up. It retraces, but it doesn't actually retrace deep enough to find the 618, and it doesn't move deep to find the, or it moves too deep to find the 50%. Okay, so in that case, I just would leave this alone, all right, because the retracement reciprocals are just going to be all messed up, because it's going to be kind of between a 1618 and a 20 area. So you know, it's just looking somewhere around here when you add the ABCD into this. It's not very pretty. You'll see it kind of overshoots. Okay, so you're really looking for just a very nice clear-cut retracement point to make the next move. Okay, so we look at this perhaps here from this swing. Actually, let's look at this swing from here to here. Okay, so we've got a first lap. Price retraces. See, it stalls out pretty much exactly on the 786 retracement. Okay, so from here down to here. So now if I take my fib tool again and draw from this high down to this low, I'm looking at the 127 extension, okay, which is here. So I automatically know where I want to focus. So we can copy this leg up and just paste it onto the bottom. Okay, so it's at this area here where we would look for that completion point, right? And if you wanted to just go and add in, use the actual expansion like we covered before, click on the expansion and draw from the low up to the high, and then bring it down to the low. Okay, and you'll see that 100% mark here lining up with 127. Okay, so that price reversal zone there, it's very small. It's within a few pips, or a fraction of a pip really. Price kind of comes in, stalls out a little bit, okay, before dropping. And we can use this on any time frame. Let's go have a look at a 5-minute chart, for example. Okay. Sometimes, obviously, the legs, the legs are not very clear cut. But let's just look, for example, let's just wing it here. Get this leg up here. So we've got this little swing here, perhaps. And then price pulls back. So if we measure this with a retracement from there up to there, pulls back, comes down deeper to a, see, this one's kind of between, it's pretty much down on the 786. It's just basically just, I mean, obviously we're dealing with a very small swing, but let's call it 786. So that would give us an extension point of a 127 extension, okay, which is up here. So if we then went and took our fib expansion tool, we drew it from the low up to that high, and we go down to that low. It's not a very pretty pattern, but there's your 100% mark, and there's the 127 extension. Price stalls out, we get some nice bearish candle action, and obviously we move lower. Okay, so have a look at this one from this low, that's from the high down to this low. Remember, we want at least a 38% retracement. So in this case, we don't actually hit the 38. You see it kind of stalls below. You see this is the leg here I'm talking about. Okay, so I wouldn't necessarily want to be looking to buy on this. So, we could possibly, let's say we get short here for whatever reason, we could possibly just use this leg simply as a take profit point. Okay, and you'll see that obviously worked out extremely well. Okay, so we get a first leg, retrace, and a second leg, but it doesn't make the 38%, so it wouldn't be a clear-cut buy for me, but it may be, let's say I'm short here for whatever reason, it may be a valid take profit. Okay, and as I said, these things can happen all over the place. When you get a situation like this, obviously now you've got two swings. You've got a swing low here, and you've got a swing low here. Okay, then price rallies and it pulls back. Just check on your fib. So I would take this one here to be more conservative. Price retraces to pretty much the 618 area. So automatically, if I'm going to look to possibly take a trade off this, I want to think about if it's hit the 618 retracement, then I want to think about a potential 1618 extension, okay? So like that. And as I said, there's nothing wrong with looking at the larger swing, but I like to go more on the conservative side, okay? And obviously, you know, we clearly plow through all of it. There's the 1618. You see it does stall out there a little bit, little reaction before obviously moving a lot higher. Okay, and in this case, perhaps the larger swing from here to here maybe was a little bit more interesting. I don't know. It's just missed that 618 area. Just. But, you know, same thing. Really. So here's the 1618 ABCD. Okay. Now, in terms of trading these things, you know, you can either use limit orders or you can use you just wait for confirmation. Okay, like some kind of candle pattern or something. So the best is, you know, obviously, if you're keen on using these things, just go and play around with them. See this drop down, it's a nice clear cut drop. Price rally, 618, very clear cut. So we want to think about a 1618 extension, right? Which is there. So if you went and then drew this in, we've got a leg down, and a leg up. So if we just copy this leg, extend it, okay, you see it'll bounce off there. Okay, we get a leg down, then we get a leg up, extend this across, okay, see here, AB equals CD, and we move up. Okay, so, you know, 5-minute chart for your scalpers. Higher time frame, you can use it, you know, daily, 4 hour, whatever you want really. Let's look at this swing here. It's a nice clear cut. Price moves down. 886 area. We're targeting take profit area to be a 113, somewhere up here. Price stalls out a little bit before obviously taking a bigger lunge up. So drew this in. That leg equals that leg. Okay. Look at these here, from there to there. Price retraces. Okay, see here, AB equals CD. Basically at the highs, we collapse. Okay, so nice for just for take profits. I know a lot of guys use them for taking profits. Okay, and they happen literally. So if we looked at the euro now, we could go like this and draw on this big swing here, for example. You know, let's say you went short, I don't know, here on this, maybe this bearish outside bar, and you have no idea where you want to look at taking profits. Well, here's a decent place right here. Okay, not to say it's going to get down there, but you know, at least you've got a simple target in place. You can always manage the trade if need be. And these things work on, you know, anything you want to trade, guys. Any time frame, any pair, any asset class. let's just have a look at these big swings here on these. Yeah, for example, if you want to look at a take profit, you see here A, B, C, D. Okay, good stalling up point. Maybe looked at this one here. I don't know if it's maybe just missed it by a fraction of a pip. This is why I kind of take a slightly more conservative approach, and that's just me. You can be more aggressive. So it's pretty much, it's missed it by literally 2 pips, like that. Okay, so maybe you want to short it up here. When you get down here, possible take profit area. Okay. Maybe you want to look to just short the thing. We get a pullback, nice 786. So we're going to look at it 127, which is probably around here somewhere. There's a 127 area. We can trade off 20 pips or something. Okay. They're not always going to work out, unfortunately, as I said. But it's a pretty reliable method, okay? And if you want to kind of use these expansion tools, there's your 100%. Okay. You can look at the larger swings as well. Just play around with it. Go and do your homework with these things. Okay, you see the 100% mark. We stall out, get a bounce of about 18 or 17 pips. Take another leg down. Okay. So look at this leg here. Get a leg down, retrace, stall out 100%, bottoms out. Here, this one goes, it overshoots it somewhat, but nevertheless. Okay, there's 100% mark, stalls out, overshoots, and drops. Okay, even, if you get long, let's say you got long here somewhere, and you want to be more aggressive with these swings all over the place, at least you've got a take profit. You can see price does stall out here, drops, 6 pips before moving higher. But at least it's something, At least it's something. We can look at cable. Just look at this quickly from here to here to here. Okay, there's a 100% mark there. So if you get long over here, perhaps, nice take profit up there. Okay, simple. Maybe look at this swing here, from here to here to here. Okay, if you get long here, take profit up here somewhere. What else can we look at? Here to here. Okay, there's your 100% there. As I said, I think it's, you can use them as trading opportunities, but they are a little more complex. Okay, see, like for this overshoots, so I wouldn't want to be looking to actually take a trade. However, if I was, short here, perhaps I could then look at my extension, and you see the 100% mark. I mean, when price gets down there, it literally pops off 18 pips. Okay, you can see at the bottoms out here, comes deep eventually. Eventually, it finds the 1618 after ages. Okay. There's another potential one here. Yeah, as I said, they literally are all over the place. You see from there to there to there. There's your 100% mark. Goes up to 127. Okay, handful of pips more, and then we fade. And as I said, you know, you're not going to find everything that works. Let's say we went short here somewhere, and we're looking at a target. Here's the 100% mark, but it doesn't get made. Okay, so I don't want to just show you examples where everything just looks beautiful. That's just not reality. But they are pretty accurate. Not gonna lie. See here, I mean, you can look at the precision on this from this low to this high. Price makes a low, but then makes a slightly lower low. Comes up to 100% mark. Bang, 18 pip. It hits the 127. Bang, 30 pip. Now you see here once again we got these like choppy things here. So you know, if you were very aggressive, you go for this one. I'm personally more on the conservative side. On the aggressive swing here, you see this downswing. Price retraces, drops down, and actually hits it to the pip before it rallies. Okay, I would have probably been looking here from this high to this low to this high. So a little bit more conservative. Okay. But it's still, you know, at least it gets the profits going. Okay, so from this low to this high to this low, there's your 100% mark. Okay. Even on these big swings, okay, from here to here to here, there's a 100% mark. And then if we look at this swing, from there to there to there to there, there's 100% mark. Stalls out, comes right back up before drifting lower. Okay. And look at this swing from here to here to here. Okay, there's your 100% mark. Bang, fades. Okay, now the reason these things work, I mean, you know, a lot of it, you always talk about, you know, different reasons and what and market cycles and everything, but a lot of people focus on these for take profits. Okay, a lot of people, and it's not just you know, mechanical, or should I say, it's not just discretionary traders. Okay, it's also algorithms. Okay, algorithms at banks and things, they use these extension points and these 100% marks as built-in take profit points. Okay. Right, guys, I'm going to wrap it there. I hope you found that helpful. So we've basically covered the ABCD pattern, either as a take profit point. That's kind of where I think is you guys should probably look at starting out more than as an entry point. Entries, obviously, as you've seen, a lot more complex, but still pretty decent. Okay, pretty decent. But you know, there's, as with anything, you know, trading wise, it needs a bit of practice and a bit of finesse to kind of, you know, get the gist of it. Cool, guys. I'll catch you all tomorrow, I think. Take care.